Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I've realized that there's so many of you that have joined the community recently and you're asking a lot of questions about individual stocks to invest in, ETFs to buy, what's Sharia compliant, what is not Sharia compliant, so on. So inshallah in the next few months, in the next few weeks and months of course inshallah to come, I will be focusing more of helping our new community members as well as of course existing members. So what I want to do today is, imagine if you are starting your portfolio today, or you've already started and you kind of want to rebalance and maybe look at some of the investments that you've made and maybe make some change. So rebalancing your portfolio is one of those very important things, as well as when you're starting a new portfolio, you want to make sure that you start on the right foot. And I know a lot of community members have basically expressed recently that they've started buying this and this and this. They've realized it's not a good investment. Now they're selling it and buying, more solid quality companies and so on. So what I want to do today and the next two videos, okay, this is 3-part videos, is to share with you guys about 15 different companies, okay, that's individual stocks that you could potentially buy, and 13 different halal ETFs, okay, ETFs that you could potentially start with. So you don't have to buy all 13 ETFs, but I'm going to show you the details of each one of those, and then you might pick maybe 2 or 3 from there. You might pick some of the stocks that I'm going to talk about today. So today's video, we're only going to focus on the stock side of things, and then coming videos we will be focusing on more on the ETFs. So we have 2-part video and 3-part video, 2 for ETFs, 1 for stocks, and that's what we're going to do inshallah. As always, just remember, this is not financial advice. This is just me giving you some information, and then what you do with it is entirely up to you. Go away and do your research, might find out more information about these companies. One thing I do like to do, and I will continue doing inshallah, is to share my journey with you guys. And what you see right now is my actual portfolio, and it's up about almost 8.5% or £7,000. I've invested a lot of my own money. I try to maximize my ISA account every single year. So since I've started, I've actually maxed out my ISA account every single year, and inshallah 2023 will do exactly that as well. So I can show you my portfolios and basically what I'm doing, but of course none of this is financial advice. You're gonna have to do your own research inshallah if you really are interested in any of the companies that we talk about today or ETFs. The other thing I would like you to do is subscribe to the channel, and of course more than 50% of you guys are actually watching the videos but you're not subscribed. So it'd be really genuinely wonderful if you can join us. There's about 4,000 of us right now. We're growing, alhamdulillah. I'm going to provide as much information, details about what I'm doing as I can, and of course we can help each other. Again, sometimes I will make mistakes, sometimes you'll make mistakes. That's normal, that's human, right? But we are here to help each other. And of course, if you can, it will be really wonderful if you can join us on the Patreon account, where you get access to a lot of the things like the buys and the sales I make every single week, our ETF trackers, the private Discord access, where a lot of the brothers are actually sharing very good practice on daily basis. So yeah, of course, join us if you can inshallah. So what I'm going to do is now I'm going to share with you the 15 different companies that we want to talk about today. Right, and this is what we have. We've got defensive stocks, we've got fast growers, and we've got cyclicals. Defensive stocks are those companies that have that grow their revenues about 2% to 10% every single year. So they grow in their earnings about 2 to 10% every single year. They are more of those companies whose product we actually need. Anytime we go to the grocery shops, we just pick those up. The pharmaceutical companies that basically sell drugs that we're depending on and so on. So these are kind of defensive. They are defensive because no matter what's happening in the economy, is some of the items they sell is basically needed, and we just buy it without even thinking about it. Okay, some of their products might not be as defensive as others, but majority of their products is kind of defensive. The second group is fast growers. These are companies that are growing their revenue very, very fast. Normally they tend to be the healthcare, those pharmaceutical companies, drug companies and so on, as well as of course the technology companies. So majority of the companies you will see in the fast growers are either technology companies or the drug companies. And the final is the cyclicals. Cyclicals are businesses that we need, but we don't, it's not essentials. You're like a consumer discretionary kind of thing where we need their products. If the economy is doing, their products tends to do really well. Okay, if the economy is not doing really well, then that means we might not buy their product, we might not use it, so and so. So it depends on where we are in the economy and so on. So their product depends on basically something else, the economy, if you like. And whereas the defensive stocks, we kind of buy them without even thinking about. So it's good to have this, because if you watched my last video, you will notice that when I talked about the breakdown of my portfolio, there were companies there just for the defensive nature of it that had to be in my portfolio. There were companies, the fast growers, that had to be there for that reason, and the cyclical. So you need to have a balanced portfolio. And I'm not saying these are the only sectors or the only things that you need to look at. There are others, but this is the ones that I want to look at. So this could be companies that whose product you already know, you buy, you're okay with. These are companies' product whose product you product and whose products you already use and you understand and you know how they're growing. And these are companies also you products you understand, as well as of course making sure that their revenue is growing 5 to 15%. So 5 to 25%. Some of these companies, by the way, growing way more than 25%. So let's start. Okay, because that's the first thing I want to do is basically show you, okay, what these companies are. So Home Depot, Procter & Gamble, Hershey Company, Unilever, and Merck. Home Depot is more of a cyclical, okay, but I put it here because it's safe. It's a defensive, because in nature is because it has a lower beta and it's a safe bet, meaning the companies, basically this company sells products that are not really required every single week, every single whatever, but for me, it's a defensive because of the nature of the company itself. Okay, they're not growing very fast. They're not going to fluctuate because of the beta I've included in here. But by nature, the business model is a more cyclical, meaning if basically the homes are selling really well, everybody is buying home product, this company tends to do really, really well. Okay, then you got Procter & Gamble sells almost every single item that you can find on the supermarkets. Okay, then you got Hershey's, all the snacks. Then you got Unilever, which is similar to Procter & Gamble and Hershey as well. And then you got Merck that sells basically products like Keytruda, which is a drug for cancer, and people depend on it. So for that reason, it has a defensive nature. So, and I tried to diversify each sector. Even though this is a defensive sector, I didn't want to make this whole section of just consumer defensive stocks, if you like. So you've got your pharmaceuticals, you've got your consumer staples, you've got your consumer discretionary, as well as, of course, those are the three sectors. So as you can see, they're growing their revenue, expected to grow their revenue about 2%, 8%, 8%, 5%, 10%, which is absolutely huge. And this is what we're looking for, from 2% to 10%. And you know the reason why they are in your portfolio because of that, okay? Because they are growing their revenue from 2 to 10%. You don't expect it more than that. Some years, of course, it will go down. Some years it will go up. But on average, that's what you will get, inshallah. Next set of companies that we have, fast growers. These are CrowdStrike. So this is a company that is a cybersecurity. It's still not making money. It's growing really fast, 42%, expected to grow 42% every single year, by the way, for the next 5 years. And it's fairly valued right now, and it has a price target of 220. Now, the company, it's doing really well so far in terms of cybersecurity. They have a different model of basically security package that they have. They are basically the Fortune 200 companies or 100 companies, 50+% of those companies actually use their product and so on. So they're growing really, really fast. Then you've got Salesforce, which has been around for quite some time. I've always said to you guys, I made a mistake for selling this company. I'm going to admit, there's two companies that I've sold that I had in my portfolio. One is Adobe, the other one is a Salesforce. I don't like to look back or whatever, but I sold them when tech stocks were out of favor, and I broke even both of them, and I actually took a tiny bit of profit and left them. Since then, they've gone up about 70-80%, God knows what. So they've gone up so much. But this is, I've always said, this is the Microsoft of the future. So I'm actually looking at, again, to come basically add to the portfolio again, because now I've sold the Microsoft. I would like to be in that side of things. They've got a lot of AI going on. They've worked with a lot of the companies out there, HR, from every single company that has some sort of a data and cloud side of things works with this company. Now then we have Visa, 14% growth expected for the next few years. We know Visa has been around for a long time. It's going to be around for a long time moving forward, inshallah. And yeah, they're doing really great. Again, it's Sharia compliant. It has nothing to do with the interest side of it. This company is a technology company. They talk about, basically they deal with the technology, not the transactions. Like they don't deal with the how much interest free, blah blah blah, none of that stuff. Okay, Booking.com is another company that's growing 27%, expected to grow 27% every single year for the next 5 years. And then Adobe, 14%. Adobe has actually come down a little bit. They actually came out a couple of days ago and basically revisited their future expectations in terms of guidance for next 2024, and for that reason I think on that day it went down 5%. Again, a great company. I love the product. I don't think I will be buying, to be honest with you. I'm more interested in CRM or Salesforce than actually Adobe right now. But there you go. Again, these are companies that are growing to basically 10 to 25%. As you can see here, it's more than 25%. Some of these companies, 3 of these, are growing more than 25%. So you need those fast growers to kind of help your portfolio. I'll be honest with you, I had Broadcom in my portfolio. I had Microsoft and Visa, and those companies really genuinely helped me my portfolio basically this year, because when all the other those kind of companies were not doing well, what saved me was these companies. So you need to have that balance as well. And finally, the cyclicals, okay, all the rest of the companies out there. Then you've got your S&P Global. This is a data company. They have a lot of they work with almost every single company and country out there, the credit ratings and so on. Right now, they're expecting to grow their earnings about 13%. Of course, they're a little bit expensive, as you can see here. Okay, Nike's there, another one, 14%. Can you imagine that? For expected to grow 14%, a company that's been around for a long time. Then Monster Beverage. Look at the history of this company in the last few years. It's absolutely it's just the growth is absolutely phenomenal. Okay, so it's expensive right now, about 13%. And then you've got Qualcomm, which is about 6% up, and I think this company 6% expected to grow 6%. I think it'll probably be next couple of years 6 to 10%, if not more, every single year. Then you got Union Pacific, which is more or less the same. Again, what I'm trying to do here is try to diversify. This one is quite hard to diversify also, although we've got these 3 companies, technology, all 4 or 5 of them, to be honest, are technology companies, but this one is in consumer discretionary, okay, and this one is financials as well. These 2 are basically technology companies. Here we've got a financials, we've got consumer discretionary, we've got consumer staples, we've got technology, and we've got industrials. So trying to diversify within that as well. So by doing this, you're owning more or less every single sector. We don't have a few of the sectors available. What you're doing is you're tapping into the low growth, lower beta, the higher beta, high growers, as well as your mid digits companies that are very well diversified. So in my opinion, this is the kind of thing you need. Again, I'm not saying go away and buy these companies right now, because as you can see, some of them are expensive, some of them are fairly valued right now, some of them are discounted. You have to do your own research and so on. But to me, this will be my foundational kind of stocks I will start with and then nibble every single time. Of course, some months, maybe, for example, Unilever is basically discounted right now. I might buy more of this and leave the rest alone, and then I'll do the same with the other companies. Then what I will also do, if I was basically new to investing, if you're new to investing and you have absolutely no idea what I'm talking about here, then maybe this is not for you. Learn what you need to do in the long run, but start with the ETFs. So next 2 videos, inshallah, I'm going to share with you guys 13 different ETFs that are Sharia compliant, that you can buy now in the UK, around the world, and so on. So I'm going to share that with you guys, inshallah, and hopefully that will help you. But if you're looking for individual stocks as well as the ETFs, have a look into some of these companies. Again, you might disagree and say, do you know what, this is actually not a good foundational companies. I have got my own list and I want to focus on this. Again, Yeah, I don't know if you noticed, there's only one UK based company here. Why? Because the UK companies have not done well, basically historically, and they're not doing well as well. Since I started investing in the UK companies, I've not had one single company that's up more than 10%. Okay, for that reason, I want to focus more on the US. And again, you might say US is not actually going to do well in the next 5 years, 10 years. I'm going to look into Japan, where everybody's talking about right now, or some of the emerging technologies, companies as well, or countries if you like, and then look into that. But overall, this is it. This is the companies that we'll be starting with. So next two videos, like I said, I'm going to share with you guys 13 different ETFs, inshallah, that you can look into it. I hope you're enjoying this type of content. If you are, please help us with the, liking the video, subscribing to the channel, as well as, of course, if you are capable, then join us on the Discord, where you get access to the, a lot of information in there with the brothers and sisters are sharing, as well as all of these things, and then, my buys and sells and comments and everything that I do on daily basis in there. Now, final thing I want to show you guys is this thing here. Okay, so investment returns and growth calculator. Imagine you invested £1,000 within this, for example, portfolio. And we're talking about stocks. Okay, so this is the reason why I always encourage people to start investing. So you started with $1,000. Every single month you add $1,000 monthly. The S&P 500 returns about 8 to 10%, every single year. Imagine if you do that for 20 years. You just close your eyes, you deposit £1,000 or dollars, whatever, single month, and then you leave it alone for 20 something years. Imagine right now you're sitting there, you're in your 20s, say 23, okay, for 20 years. So by the time you're 43 years of age, you could potentially have closer to £600,000 or dollars, whichever. Your contribution to that will be 240. You're paying only 240,000, okay? But total interest earned, meaning basically the price appreciation and everything else, 352,947 US dollars. That's absolutely huge for over 20 year period. And this is why I don't like buying and selling quickly. Don't focus on the long term. If you did that for 25 years, okay, look again, okay, let me quickly update. Okay, so 25 years, if I did that for 25 years, just 5 years more, look at the return. This is why when I did it earlier, I was like, wait, does this even make any sense? So I'm putting 1,000 every single month, but instead of 20 years, okay, I've decided I'm gonna add 5 more years and keep paying that £1,000 every single year. It moves from 593,000, okay, let's even call 600,000 to 9,958,000 US dollars, which is absolutely ridiculous. And this is why we genuinely need to tell people to start investing. I remember one of the brothers in the basically Discord once said, do you know what, we should be going on Islamic channel and tell people about investing in the markets, investing, whether buying real estate or buying whatever it is. We should be telling people to start investing, because if you're in your 20s, and wallahi al-azim, if you got the money, if you get in enough money and you can put £1,000 every single month and you be frugal about it, by the time you're in your 40s, okay, imagine you started at age 20 or 25. By the time you're 50, you got closer to $1 million US dollars, and you don't have to worry about anything. If you're buying dividend companies, it probably would also appreciate. You probably will be getting at least, like for this one here, I think I did the calculation early. If your portfolio is like a 4%, you gain about almost to £24,000 a year, dollars a year of dividends. That's about $2,000 every single month. That should be enough for you to cover your expenses by the time you whatever. Okay. Again, if not that, then you got the price appreciation. Look at that. Look at how much you can make. Over £350,000 US dollars. So yeah, just look into these things, guys. If you are worried about investing, I'm telling you, it works and is working for me, alhamdulillah. Since I started this portfolio, I've made, I think about, I'll show you exactly how much. I can't actually show you because the network let me down, but I think I made about, with even taking some losses as well, I think about 7,000, closer to 7,000 pounds in price appreciation, and another 3,000, 4,000, whatever it was, of in terms of dividends. Now that's a lot of money since and that portfolio started 2020, May of 2020. So I'm making about 11,000. If I carry on doing that, inshallah, I'm hopeful I can get to this sort of a stage in maybe 20 years, 15 years from now on. Anyway, I hope you enjoyed the video, and if you are, please like, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.